All right, we are live again, July 28th version of Real Estate in Real Time. Thanks for tuning in. I'm Chase Whitney, of course. This is episode, 6 or 7 now. Hopefully we're going to be back on track. I've got a 2.5-week-old at home, and things are settling down a bit, so I hope to be able to get these back up every week now, but sorry for the delay. But here we are, and I figured I would kick it off. It's the Angels home opener tonight. Let's go with a good game, hopefully get a W here, and I'm going to crack open a pretty heavy one. This is, and hopefully Leah's watching, so she's not going to make fun of me anymore, but this is Revision Brewing Company, Dr. Lupulin. Okay, kind of a cool can looking here. Diabolical, it says right there, Diabolical 3X IPA out of, where are these guys located? Out of Sparks, Nevada, 11.3%. It's better than before. Let's give this a go. I heard it was good. Let's see. It's pretty smooth. Usually when they get above about 10%, you can really taste the alcohol, and it kind of bites you a little bit. There's a little bit of that hint to it, but that's actually pretty smooth and actually very, very delicious. So, again, not while you're here. Maybe you're here for the beer reviews, and you might tune out afterwards, but I'm going to go over the housing report again. I'm going to swap here, share my screen. So again, these reports come out every 2 weeks. We subscribe to a local housing economist whose name is Stephen Thomas. We are able to share these reports with you free of charge. Just email me, drop me a comment. Again, shoot me a text. You've got my number. I'm easy to get a hold of. I'm happy to send you the full report. But as I've been doing the past couple of weeks here, kind of breaking down the synopsis and then going deep on a couple of cities with the numbers that are shared. And again, if you have any questions on certain cities live, shoot me a comment, and I'm happy to break them down. Otherwise, any questions, let me know. And feel free to like, comment, and share. I'd really appreciate it to hopefully get this further spread. So, housing market's been awfully hot. It's not changing. Let's take a look. So he goes over active inventory. Active listing inventory has dropped to unprecedentedly low levels in March. It was at low levels last experienced in 2013. During the lockdown, COVID-19 suppressed the number of homeowners coming on the market. And if you follow this chart, again, green is this year, and this is his projection, but active inventory looks to have peaked in May. And don't really see it coming back up, and we'll talk about maybe why in a little bit, but inventory is low. So again, we talk about supply and demand, we talk about kind of what drives the market and how hot it is, and this is the first puzzle to that. He goes on, the lack of new homeowners coming on the market over the last several months has substantially contributed to the ultra-low listing inventory, its lowest end of July level since tracking began in 2004. So the lowest late July numbers since he started tracking these numbers 16 years ago. That's how low inventory across Orange County is right now. It says since the peak of inventory in May, inventory has dropped 9% off of that May high. Again, back on this green chart up top, or this green line up top here, we're 9% below even that high. So wild inventory this year. Let's go. Demand, hottest level since 2012. Prior to the virus lockdown at the start of March, with 3.75% interest rates, the demand had reached levels not seen since 2015. He goes on, however, the real estate industry adapted and became an essential service quickly into the lockdowns, and demand had doubled from April lows by the end of May, and at the beginning of July had tripled in the beginning of July. Again, interest rates have dropped and are now at 3 or sub 3%, which is, if you haven't heard, the lowest in recorded history. And again, I broke this down last week, but real quick, if we are predicting about, again, taking Cyprus as an example, because it's kind of our bread and butter in the area that we, of course, live in, how the average home sales price has gone up $40,000 year over year, July 2019 to July 2020. And I'll kind of do this real quick. But if the home price from, do I have it written down still? I do. So $560,000 house, July of 2019, at the current interest rates, your payment was $2,106. That's principal and interest. $2,106 last year. Home prices have gone up $40,000. That same house is $600,000. Your payment for the same house with the higher price dropped $147 a month to $19.59 a month for the same house. Even though the price is up, your payment, which you're stuck with for 30 years, has dropped $147 a month, almost $1,800 a year because of the rate drop. So that, I was talking with a gal yesterday, excuse me, first time home buyer, and she's heard that rates are low. She's excited about that. Doesn't really know what it means. So when I told her how that kind of plays out into her particular situation, she was flabbergasted because she had no idea. Right? And 3% interest rate's great, but with no context, you don't really know what that means. So it's really, really, really powerful and really important stuff to keep an eye on. He goes on here and says the low mortgage rate environment has been the rocket fuel that propelled demand to 3,200 pending sales today, its highest level since 2012. And he goes on, essentially the spring market was postponed, and currently we're in the middle of the strongest demand of the year and are poised to peak between now and the beginning of August. The next couple of weeks he's predicting is going to be the peak of demand, and it will taper off again, but maybe not to the low, that we usually anticipate, end of the year. Here is the demand chart. This is just absolutely fascinating, and if you've been watching these videos every week or two that I've been doing, we started doing these when we were about here. So check this out. So if you follow this green line, we go up, right, for 2020. Demand kind of peaked for the time being at the very beginning of March, right, straight down into March. I don't think you can see my mouse, but I'm right at the crest of the initial green line here. It tapered off a bit as things were uncertain the first half of March, and then of course lockdowns hit and demand just absolutely plummeted and hit that bottom at basically the middle, about a week and a half into April. Now the first little tick up here was kind of that first sign of hope, as the market kind of made that turn into maybe the real estate market's not going to get hit too hard. Maybe this is not going to be kind of doom and gloom as some have predicted. And then check this out. This is just absolutely unbelievable. This line, if you're listening and not watching, is about it's not straight up, but unbelievable from the beginning of last week of April, beginning of May, through the first week of July was just almost straight up and down. And it's tapered off a bit. However, the increase the last 2 weeks has been higher than the prior 2 weeks. So the first 2 weeks of July saw an increase, a modest increase of about, I believe it was 5%, and the increase now is back to 9%. So demand is still going up at a pretty fast pace, and that will taper off again as the seasons change and we get into the more traditional fall season. That will start to taper off a little bit. But where are we on this chart? He goes on, expected market time, hottest level since June of 2013. He says the story is not only a V-shaped recovery, it's that the market has not been this hot in 7 years. And market time, per his metric, is sign in the yard, marketing begins. On the realtor back end, it's usually when it goes on the MLS as an active listing and then gets published to Zillow and Truly, Realtor.com and those websites. He says it's at the lowest point of the year, 43 days, and has not been this low since July of 2005. This low in July since 2005. So again, market time for the month of July historically, lowest in 15 years. Anything below 60 days is a hot seller's market. So 43 days is a scorching hot seller's market. On March 5th, prior to the lockdown, it was at 48 days, the lowest start to a March since 2013. So Orange County was already pumping on all cylinders. And he goes on, with an ultra-low supply combining with piping hot demand, the expected market time has dropped to unprecedented levels for the middle of summer, and it will remain a strong seller's market for the balance of 2020. And then here's market time. So this you want to be lower. The lower this number is on this chart, the faster homes are selling and the hotter the seller's market is. So, of course, if you look at the top green here, we did peak barely into a slight buyer's market for a week or so. Again, between 90 and 120, which is kind of right at the middle, if you average the top of the green line here, we were kind of in a balanced market for, looks like about 4 to 6 weeks per this chart. But again, since demand skyrocketed, market time has plummeted. Therefore, we are back into just a absolute scorching hot market. He goes on. This is interesting. Do not expect a flood of new inventory due to the first period of forbearance that's coming to an end in September. He said many banks will extend the benefit through March, but it's also important to note that 90% of all homes in forbearance have more than 10% equity, and 77% have more than 20% equity. What does that mean? It means that if any of these homeowners are forced to sell due to a financial hardship, they have equity in their home to sell. They're not going to be a short sale, and usually the fire sales or the discount homes are usually when they're in foreclosure, in short sale. And he's predicting that those types of sales aren't going to happen to the extent that a lot of some more of the doomsdayers are predicting, right? And also, this is also interesting too. Many wonder where the high level of buyer demand is coming from, given the fact that there are 16.2 million continuing claims for unemployment insurance. It's important to highlight the fact that there are over 120 million people who are employed and able to make a home purchase. Additionally, a majority of the unemployed fall within the lower income levels, which could have an impact on rentals, but not the residential real estate market. And again, while there is a lot of hardship going on, a lot of unemployment that we're aware of course, we're following the numbers, but the buyers, the folks that are employed have a job, a stable job, they can qualify. The market is very, very beneficial, if not only because of the interest rate. Because again, what I kind of hammer over and over is get your mind off the purchase price. It's an important number. It's part of the contract, of course. But again, after you close escrow, after you've shared that number with your best friend, your mom, and your coworkers, that number is kind of irrelevant, right? You're stuck with the payment. So focus on the payment, which is a factor of your interest rate, your down payment, of course, the purchase price, but it's all in that formula that kind of brings you to that P&I payment. So focus on that more. The rest of 2020 summary, his expectation: expect the active listing inventory to remain at low levels, demand to remain strong, mortgage rates to remain low, and the expected market time to remain at its lowest level in years. So he's basically predicting kind of a flat line from where we are all the way through the end of the year. That wouldn't surprise me. And then let's hop into the chart that or the spreadsheet that I kind of go over for a couple of cities specifically. And if you have a specific city you want me to break down and dive into deeper, let me know. But I'll stick with the 3 and this time 4 that we've been going over. So Anaheim, inventory is up from 131 to 146. And when I say from, I'm talking about 2 weeks ago, the report from 2 weeks ago. So Anaheim is up 15 new houses. Demand in Anaheim specifically is up 5%. Market time relatively stable from 2 weeks ago and also 4 weeks ago. However, if you look at July 25th of last year, we're about half. 28 days now versus 49 days. So it was still a seller's market last year this time, but homes are selling almost exactly twice as fast. Going into Buena Park, inventory is up from 45 to 47, so not much. Demand is up 10% from 48 homes pending last report to 53 this time. And then, of course, market time again, stable from the last 2 weeks, a little bit slower from 4 weeks ago, end of June. But again, almost exactly twice as fast as this time last year, which is, again, the reason why we focus on last year's numbers is last year was a normal market, right? This is your regular July of last year. So homes are selling twice as fast as they did in a regular summer last year. Cypress, of course, check this out. Inventory is down 37, 29. Inventory is down 20% from 37 to 29 homes available. Demand is up 15%, the most of the 3 so far. And the market time is, down from 27 and 21 days, 2 and 4 weeks ago, respectively, down to 19. Check this out. A year ago, July, in Cypress, we had an expected market time of 72 days, which is a seller's market, not strong per Stephen Thomas's formula, but a seller's market nonetheless. 19 days now versus 72 a year ago. Unbelievable. Garden Grove, I'm going to do that again because another neighboring city. Inventory is up from 89 to 96. Demand is up 18%. Garden Grove is a big city along with Anaheim and Buena Park. So up 18%. Market time relatively stable at 31 days compared to the last 2 weeks and last month. And again, faster than last summer. Not to the extent of Cypress especially, but even Anaheim Buena Park, 31 days today compared to 50 days last summer. That's kind of an overview of those couple of cities. And again, if you have any questions, drop me a line. I can get you this whole report, which goes over a lot more information that I don't go over in these videos. I'm happy to share. And then just a personal story real quick on our newest listing that we had in Cypress. Came to market on Wednesday afternoon, Thursday morning, something like that. We had 26 showings in 3 days, 26 in-person showings in 3 days. We had 4 offers, and we accepted an offer $16,000 above list price, and are cranking towards closing. So that took 6 days, 5 days to sell, 6 days to sell. The market is just scorching hot. If you're a seller thinking about it, again, per this report, they're expecting the market to soften a little bit through the end of the year. Demand will start to plateau a little bit. So if you want to take advantage of that, let us know. We're here to help. I'm happy to answer any questions. Again, even if you drop me a comment, if you're not watching this live, you see it later, drop a comment or shoot me a message. Head over to our site. A lot of good resources there for Cypress especially, but all the cities as well locally. That's below on this video, number 4 realestatehelp.com. Have a great day. Thank you so much for watching or listening, and I will see you on here next week. See ya.